The trial of former FTX CEO Sam Bankman-Fried started on October 3rd. Four witnesses explained to jurors how $8 billion in funds from customers went missing: luxury real estate, political donations, investments, and magazine covers. A year ago, that was the life of Sam Bankman-Fried. Assistant U.S. Attorney Thane Reen remarked during the opening statements, the world's most famous crypto trial. All of it was built on lies. Reen continued, claiming that the co-founder of Alameda Research and FTX lied to the world to get richer and increase influence by lobbying in Washington, D.C. Reen's statement apparently affected even Bankman-Fried's defense counsel, who responded with a lukewarm remark. His attorney, Mark Cohen, portrayed his client as an entrepreneur who made mistakes during times of accelerated growth. There was no theft, he told jurors. At the gallery, among journalists and attorneys, were Joseph Bankman and Barbara Fried, parents of the defendant. While Joseph occasionally smiled over the last few days, Barbara stared at her son in courtroom for hours. This week, four witnesses testified in the trial at the United States District Court in Manhattan. The list includes a French trader, an investor in FTX, alongside Adam Udidia and Gary Wang, former close friends of Bankman-Fried. Sam Bankman-Fried trial highlights were covered by Cointelegraph. On the ground, the prosecutor's first witness to the jury was a cocoa trader from Paris, currently living in London. Mark Joyard was one of the victims of the FTX debacle, November 2022. Joyard told jurors he had 4 Bitcoins on FTX worth nearly $100,000 at the time. He recalled feeling anxious after trying to withdraw funds without receiving return. On FTX, he never traded futures. The Bitcoin stake was a substantial part of Joyard's savings. Prosecutors use his testimony to illustrate how customers who trusted funds with FTX have been harmed since last year's events. And Bankman-Fried's defense tried to downplay prosecutors' arguments, saying that the trader was a licensed professional in London who did not make decisions based on celebrity endorsements. Cohen noted there was nothing wrong with hiring Tom Brady to run an ad for FTX. Adam Udidia and Bankman-Fried became friends at the Massachusetts Institute of Technology. Before joining FTX as a developer in January 2021, Udidia briefly worked at Alameda in 2017 as an intern. He was also one of the residents in FTX's $35 million luxury property in the Bahamas. According to his testimony, fiat funds from customers were received by FTX through an Alameda subsidiary called North Dimension. Every deposit made by a FTX customer was considered a debt owed from Alameda to FTX. At the time of the exchange's collapse, this liability stood at $8 billion. Udidia has learned about the billionaire debt between the companies months before its bankruptcy filing. Are things okay? Udidia has asked Bankman-Fried in a paddle tennis court mentioning Alameda's liability. He did not receive a positive response. We're not bulletproof anymore. Bankman-Fried told him, adding that it would take the companies 6 months to 3 years to settle their accounts. He looked nervous, Udidia recalled. Until November's collapse, Udidia saw FTX taking over its competitors, Binance and Coinbase. He even spent his millionaire bonus to acquire a 5% stake in the firm. Udidia resigned in November 2022 after learning that Alameda was using the funds sent from FTX customers to repay its debts. He has been collaborating with the U.S. Department of Justice since last year. Matthew Huang, co-founder of venture capital firm Paradigm, invested a total of $278 million in FTX in 2 funding rounds between 2021 and 2020. Tell me, for him, it was a complete loss. According to Wang, the firm was not aware of the commingling of funds between FTX and Alameda, nor of the privileges that Alameda had with the crypto exchange. Alameda was exempt from the FTX liquidation engine, which closes positions at risk of liquidation, as shown by pieces of evidence brought by prosecutors from FTX code and database. Under the exemption, Alameda was able to leverage its position and maintain a negative balance with FTX. Huang admitted not conducting deeper due diligence on FTX, instead relying on the information provided by Bankman-Fried. Day 3 of the hashtag SBF trial. We're here bright and early. In Wang's words, Bankman-Fried was very resistant to the idea of having investors on FTX's board of directors, but pledged to build one and appoint experienced executives. Once co-founders of two prominent companies, Lime and Bankman-Fried, found themselves on opposite sides of the courtroom this week. I'm here because I committed wire fraud, securities fraud, and one commodities fraud, he told jurors, adding that he had also engaged in conspiracy alongside Bankman-Fried, Caroline Ellison, former CEO of Alameda Research, and Nishant Singh, former director of engineering. One is considered a key witness in the case. His examination by prosecutors started on October 5 and should conclude on October 10 when the second week of the trial begins. Wang offered a deeper look at how FTX and Alameda operated under Bankman-Fried's direction. In 2019, a few months after FTX was founded, Alameda was granted special privileges on FTX code, said Wang, based on screenshots of FTX database and code on GitHub. Prosecutors showed Alameda had an unlimited negative balance, a $65 billion special line of credit, and an exemption from liquidation. Bankman-Fried's defense counsel argued that these privileges were similar to ones received by other market makers on FTX. The defense also pointed to the fact that Alameda was the primary market maker on FTX. Thus, having the ability to have a negative balance was essential for its role. According to Wang, the commingling of funds between the companies grew over time. In 2020, Bankman-Fried instructed Wang to keep Alameda's negative balance under FTX revenue. Alameda's negative balance arose, and so did its credit line with FTX. The liability of Alameda for FTX peaked at $3 million in late 2021. For $300 million in 2020. I trusted his judgment. Wang replied when asked why he supported Alameda's privileges. Prosecutors also highlighted the mobile coin exploit in 2021 in an attempt to conceal the loss from FTX investors. Bankman-Fried allegedly told Wang and Ellison to add the millionaire deficit to Alameda's balance sheet instead of keeping it on FTX Financial. Another key revelation was that FTX Insurance Fund had manipulated data, said one, in the months prior to FTX's collapse. Bankman-Fried, Wang, and Singh discussed the possibility of shutting down Alameda and replacing it with other market makers. At the time, however, the company as liabilities to FTX stood at $14 billion. In November 2022, Alameda ceased operations. Wang was also cooperating with prosecutors. His testimony will resume on October 10th. Caroline Ellison will also be heard on the same day.